Okay. Welcome to Apex Effects, and majorly today we are going to see about gold. We're going to analyze gold according to how it has been. So our analysis on gold, as we can see, there was a change of character from in the daily. First we move to the daily. There was a break of structure from this point, so the market was going down, which was that there was a downtrend since the market was so choppy. So the market is so choppy, as you can see, the market didn't have a good trend. It had a good trend in the previous days, but for the few months, let's say from May, June, July, August up to now, the market has been in a choppy trend. But it's okay for us. We can always trade even in a choppy trend because our analysis is okay. It allows us to also trade in those choppy trends. So majorly we shall go to the 4-hour time frame. As we go to the 4-hour time frame, we can see the 4 hours time frame. You can see, let's mark first the day, how the day started. So we mark how the day started first. The day started is looking bullish, and then the long run we don't know how the market will go. So from the day time frame, the market is bullish. So we note down from the day, it's bullish. In the daily time frame, the market was bullish. So you come here, text, get some text from here. So let's have text. So the market was bullish daily. The market was bullish. So the market was bullish. Now we go to the 4 hours. So if you go to the 4 hours, and for the 4 hours, the first analysis that we do is we look at the candlestick which started the day. We look at the candlestick that started the 4 hours day. So majorly look at it first. Look at it. The candlestick that started the day. This was it. So we mark out the high and the low. You can mark out the high, the low, and the low of that candle. So mark out the high and the low. This is not the high. This is the high. High of the 4 hours. 4 hours. And this is now the low. This will be the low now. This will be the low. The 4 hours. 4H. Okay. So for the 4 hours, mark out the high, stop low, fast candle that open the day. open the day. Okay. So as you can see from this analysis, the market broke out of the region and went upside. Later it retrieved back, so it means that there was a breakout, but it retraced to its point. So we shall see how it goes during the day. So now the second aspect, we come and look at the trend. Now we look at the trend of the market. As you can see, this is a 9 moving average, this is a 20. As you can see, the market was having a downtrend. It was having a downtrend. So the market was having a downtrend at this point. So and then trend is the market is having a downtrend. So as you can see from this analysis, mostly the market is having a downtrend, but you can see the moving averages are already interjecting the top candle, top high and top low of the candle. So for this, we shall start by looking for the lower of the day and the higher of the previous day. So from this, this was the lower low of the previous day. This will be now at this point. This will be mark. Sorry for that. So as you can see from here, the market was at the market moves in a consistent way, that it's either moving on an upward trend. Let me try to show you an example. So the market is either moving on an upward trend, either moving like this, and like this. So it's either the market is moving on an upward trend, or the market is moving on a downward trend. So for this one, the market was moving in a downward trend. So this. So the market was moving majorly in a downward trajectory. So you can see. So for this, the market was moving in a downward trajectory. So from here, it's lower low to higher high, to higher low, to higher high, to higher low, to higher high. Yet from here, it's at higher high to lower low to higher low. So this was as you can see, this was a higher high, this was a higher high, so it means this was a higher high. So here the market was at high, then it went down to a higher low, then it moved back to went from high lower low to lower low, sorry, to lower low to higher low. Okay, sorry, this was a low, then it moved to now, so okay, then it moved to so the market moved now to a higher low, then it moved now to here, which is a lower low, created a lower low. So it created a okay. So these are the some of the basic in terms of the 4 hours you are supposed to understand as you are analyzing your trade. These are some of the basic things you literally need to understand before even knowing either to buy or sell. So, as you can see, these are some of the analysis, and some of these analysis gives you a proactive view that the market will either go on the upside or either go on the downside. But since the market is going on the downside, there is one thing that happened. The market created a change of character. A change of character means a change of delivery state where the market moves the opposite direction. It was bullish, the market moved and became bearish. So what do we do from this point? We start to take our analysis from those change of character and breakout structure. A breakout structure is an initiative to show that the move will continue, but a change of character is an initiative to show that there is been a change in the trend, in terms of if the trend was going up, it will start going down. That is a specific way of showing how the change meant. So as we can see, there was a change of character and created a downward trend. So for someone who was trading the previous week on Friday, it means you were supposed to take trades on sell position from Thursday to Friday. So that was the first initiative. So the whole time you were to take the trades from that point. So as we can see, the market opened, went down, created some liquidity to initiate a lower low. You get it? It created an initiative to trade. So we shall be looking where are the supply zone and the demand zone now. So for here, there were two changes of states. So from the supply zone, there was a supply zone from this point. As you can see, there was this supply zone from here. This was the supply zone. a supply zone from that point. So there was a supply zone from there. So this was our first supply zone. This was the first supply zone. This was now our first this was now our first sorry this was the first supply zone. So according to the first supply zone, it was never mitigated. So that's the first step. Then the second supply zone was literally mitigated from this point. So there was a second, that was the first supply zone. First. Then there was this, there was a fair value gap. It created a fair value gap from this point. So it came in the 4 hours, created a supply, and later created a it was a fair value gap now. It created a fair value gap. So the first step, created a supply zone, created a fair value gap. So on Friday, it was literally a clearance indication. There was a clearance indication that the market was going to go in a downward trend. Okay. Without knowing, there was now the demand here. There was a demand mitigation here, which literally was not activated from this point. So the market was to move in that range from that demand zone. So there was a demand area mitigated here. There was these are now the demand zone. This is now the demand zone. This was now the demand zone area. So according to our analysis, as you can see, these are clear brief indication that we have literally analyzed the market using all the basic essentials required in trading. So in case of any move that happens, we will know that we have the basic necessity. Now, from now, the final waiting resting bay for us, we shall now initiate to know where our entries will be. So since this is a downward trend and yet it has already created a lower low, it means that the market is going to look for a higher low. And where will this higher low start from? So we come to the Fibonacci tool. So we draw the Fibonacci from the change of character delivering state to now the lower low place. We draw now the Fibonacci from there to the lower state place. Do you understand? So the first thing that we need to understand now is that the market has already mitigated one of the zone. That is the 60 50. The market has already mitigated this zone. It means the market is going literally on a downward trend. This is now our entry. This is now our entry state. Let me do the call out now. This is now our entry. This is now our entry point. This is how you use now Fibonacci fully. You know how to use Fibonacci fully. So this is now our entry point. If you want to clarify this information, just move to a lower time. Let's use the 1 hour. You see, the market has already just mitigated the entry point, and it's looking for a downward stand. But since we can't take that entry fully, you could have already taken it because it has already taken out the liquidity from this point. The problem is now the change of state of the trend. The market is trying to push to the upwards. So we shall wait for a breakout from this region. So we know we want to take the sell positions, but we are waiting now for the breakout from this region. If the market breaks and closes below this region, it has already created a change of character from this point. It means that there is a downtrend from this point. So for me, if I will be me, I will push now my short position from here, my stop loss will be here, and my take profit will be here. That's a risk of 1:3. So for me, I'll accept to take my position from there now. The market will move upwards to this point, either mitigate at the second time, then now pull down to the low point. This is a live analysis that I'm doing for you guys because I believe in you guys. I literally believe in you guys. As you can see in the morning, I think it mitigated on the demand zone. It tried and mitigated the demand zone, but I didn't see it fully mitigate the demand zone. Then it literally went. It mitigated the demand zone from this point just a little bit, and it was pushed back upwards. As you can see, it was pushed upwards. But since there is a change of character, that's a clear indication for me that the market is going on a downward trend. It's trying to consolidate, but I know clearly we are supposed to take some sell positions from there. A risk to reward of 1:3. Our stop loss at 34.09. Our entry at 33.93. Our take profits will be at 33.69, and I think that will be the close of the day. Since it's not, the market is not volatile today, you need to be patient for it. Just be patient. Just be patient with it, and you will reap your profits slowly by slowly. So this was a clear analysis on gold, and as you can see, this was a very clear analysis on gold, and very clear analysis on gold. Very clear analysis on gold. So we'll be waiting for the New York session, which we know the market will be pulled downwards so much. Because it will be looking for also this fair value gap from this point. There is this fair value gap from this point. Go either to mitigate the fair value gap and push upside, but we shall have already taken our profits from that point. That's state of delivery, because it has already taken out the liquidity from the upside. Now it's moving downwards to also grab those liquidities from the downside. So if you were to take your positions, these were the entries for you guys, and I know you'll be okay in your analysis from there. So it's how it's done. So back to our state. So the final decision is a sell on gold. That's a sell on gold. So the entries I'll literally put here the entries. Let me so for the stop loss, so for the entries, first, the stop loss will be at 3409. Then the entry is at 3394. Then TP is at 3369. 3369. So like a risk ratio of 1:3. Risk ratio of 1:3, which is, it should be okay. So for the entry, let me type them. And for the SL, that is 3409. Then for the entry is at 3394. 94. TP it's at 63, 60, 69. That is this is now 34 pips. That will be 34. So it will be 34 pips on gold for you guys. So for this it will be 34 pips. I've already sent the details on my Telegram account. I know it will be 34 pips for you guys on gold today, and you close your trade from that point. 34 pips. Simple and clear. Just a very simple and clear indication. Simple and very clear. So that will be for today, and I think I'll, when we hit our take profit, I'll literally pull out a video and show you the results of what happened to the market today. Let me save this. Let me save it. Let me save this analysis. Let me save it. And then let me save the analysis. Let me save the analysis for you guys. Save the analysis for you guys. I've already downloaded the image. Yeah, I've already downloaded the image for you guys. I'll save it. When it hits our take profit, I'll literally show you how the results went, but I know it will be a good result for you guys, and I'll create that video next showing you at the end of the day how the market went and how the results were. So that's it for you today, and I think I've done a good analysis for you guys. And it's simple. It's a simple, straightforward strategy. It's only a matter of how do you start putting it forward and getting to know where and how will I be able to put this position in place. So for now, that's it. And subscribe, share the content, and be able to. I teach trading for free, and I'll be, if you really want, you can just inbox to the text, and then I'll put my contacts. I can be able to issue a line for free.
Good.